Hi, everyone. It's Pete Carmasino with Chaikin Analytics doing another episode of Stock Spotlight. Today's stock is FIVERR. So we'll get to the chart in a second. I want to show you a little bit about the dashboard on our system. This is where any new users or all users really come in and look at what they see the first thing in the day. They see their list, whatever list it falls on, what's happening in the performance in that list. There are different ideas that live inside of this dashboard as well. And you can see the latest newsletters. But I wanted to look at FIVERR. So I'm going to pull up FVRR and pull the chart and take a look at it from here. So the stock's just been really on fire. I mean, the COVID lockdown last year that started, we started to see really a rally above the long-term trend around $25. I mean, the stock has gone all the way up to $336 a share. Fantastic, right? If you don't know what FIVERR is, it's a pretty cool freelance service. If you go take a look at what's going on, and they got the name, I guess, from one of the minimum ways to get anything done is around $5 or in $5 increments in some cases. So it's kind of cool. It's an interesting setup. I mean, people were, turning to FIVERR for lots of reasons. One to work and one to go get services from those who are willing to provide them at a really cut rate sort of cost and price effectiveness. Over time, I mean, the stock has sort of been in and out of a neutral and a bullish rating, rightfully so. It's been sort of really running higher. And if you look at our power gauge, we do have some valuation metrics in there, which on the financial side have all sort of migrated to the bearish side. We're actually very bearish as a whole here, but a few of them are just on the bearish side. But one is obviously price to sales and price to book. I mean, from a fundamental standpoint, a revenue of 189 million with a market cap of $7 billion might be considered lofty to some. 38 times sales, 21 times book. I'm not an analyst here, but I'm just looking at the numbers, right? I mean, I'm just kind of finding ideas through different methodologies and different things that have been used for years. And that's the beauty of our power gauge. It takes those and weights them, creates the rating, and look what happened. We started to turn bearish. Now, rightfully so, we have really been bearish on the stock, and I'll show you how this works, since around the week of November 30th or so. And why do I say that? Well, on the previous videos, I pointed out that there's a yellow box there with a red line down at the bottom. You saw this sort of migrate in and out of this level, and then it looked like it stuck for quite some time here. And what that means is the stock is above its trend. It's absolutely working. The market had been really behind it. Look at the relative strength. But now we're saying that the fundamentals, again, if you will, the resume of the company, the report card of the company, not the stock, the company, is a little bearish, right? Or actually has turned bearish. And even though earnings growth is there and surprise and all of the other things that are there, the stock has broken its long-term trend a few times and closed underneath, and that's when our bearish rating appears. So it just is an alert. It says, look, you've had a stock that's been doing very well. We've had some rating changes on it. The valuation might have gotten really out of balance, so to speak. And you can look at what experts are saying about this, right? Rating trend is high, estimate trend's high, short interest looks to be very bearish. Insider activity is kind of neutral, but relative strength, again, in the industry of internet direct marketing, look to be a little weak. And that's maybe what's happening here. You're seeing a series of lower highs and lower lows. Maybe a retest today of that long-term trend line, and it's starting to roll over. But this is a beautiful sort of representation of how you can find names that might be changing trend. I'm seeing a very slight change of trend here, although it is oversold. So there's a mixed bag here, but it is pointing to something that's potentially maybe in trouble with the reopening upon us. Perhaps this name or this service becomes, I don't want to say less needed, but maybe it's just less bullish. There's another name out there that's a competitor. We'll maybe focus on that in a week or two, but I'm looking at FIVERR today, and I'm just seeing a trend change and noticing some technical breakdowns, money flow getting weaker, relative strength getting weaker. We are oversold for sure, but rating has gone to negative on a bearish setup right now. And why am I showing this? Well, because you have the ability to test drive this yourself. Come take a look at it. You come to chaikinanalytics.com/stock spotlight. Just test drive it. It's 14 days. It's free, right? You get access to everything a member does. You can look at all of our tutorials. You'll see our newsletters. You'll get a one-on-one support. Give it a try. What do you have to lose? Come join us. Chaikinanalytics.com/stock spotlight. Talk to you soon.